Today, we're digging into one of the most important questions for homeowners tapping into home equity. Is a HELOC actually a good idea? Now, if you're considering a home equity line of credit, you've probably heard about the flexibility and low rates, but you've also likely heard warnings about the risks like variable interest and using your home as collateral. In this video, we're going to explore all the major pros and cons of HELOCs, explain how they work, when they make sense, and what pitfalls to watch out for. Whether you're planning renovations, managing debt, or building a financial safety net, by the end of this video, you'll have a clear, well-rounded view of whether a HELOC fits your goals. Question 1. What is a HELOC and how is it different from other home loans? A HELOC, or home equity line of credit, is a revolving line of credit that lets you borrow against the equity in your home. Unlike traditional home equity loan, where you receive a set lump sum, a HELOC gives you a credit limit you can draw against as needed. Similar to a credit card, you only pay interest on what you actually use, not on the full amount available. And most HELOCs have a draw period, usually about 10 years, during which you can borrow and make interest-only payments. Now, after that, you typically enter a repayment period where you begin paying back the principal and interest. Because it's secured by your home, the rate is generally lower than unsecured borrowing options like personal loans or credit cards, but your home is on the line if you can't make the payments. Question 2. What are the major advantages of a HELOC? Okay, so one of the biggest advantages of a HELOC is flexibility. Once approved, you can borrow as much or as little of your credit limit as you need. When you need it, you only pay interest on the funds that you actually use. This makes HELOCs especially useful for ongoing unpredictable expenses like phased home renovations, medical costs, or variable budgeting where costs may change over time. Another key benefit is lower interest rates compared to other forms of credit. Because the loan is secured by your home, lenders typically charge less interest than they do for credit cards or unsecured personal loans. This can translate into significant savings if you're borrowing a large amount over an extended period. A third advantage is that you borrow only what you need. If your credit line is $100,000, but you only draw $20,000, you'll only pay interest on that $20,000, not the full line of credit. That can make HELOCs more efficient and cheaper than lump sum borrowing when you don't have a fixed spending plan. Finally, in many cases, the interest paid may be tax deductible, but only if the money is used to buy, build, or substantially improve your home and you itemize deductions on your tax return. Since tax laws are complex and changing over time, it's wise to check with a tax professional about your specific situation. Question 3. What are the downsides of a HELOC and what do I need to be aware of? The biggest downside of a HELOC is that your home serves as collateral. If you're unable to make payments, the lender could initiate foreclosure proceedings and you could lose your home. That risk makes it essential to borrow only what you can realistically repay and to have a solid repayment plan in place. Another major con is that most HELOCs come with variable interest rates. Unlike a fixed rate mortgage where your monthly payment stays the same over time, a HELOC's rate can fluctuate with market conditions, which means your monthly payment could increase, sometimes significantly, if interest rates rise. That unpredictability can make budgeting more challenging, especially if you're relying on low initial rates. There's also a temptation to overspend. So with easy access to a large line of credit and interest-only payments during a draw period, some homeowners end up borrowing more than they need or can afford, only to face higher payments later in the repayment phase. Discipline is key since borrowing against your home needs to be done intentionally, not impulsively. Some HELOC products include closing costs, annual fees, or prepayment penalties, which can add up the cost of borrowing. These vary widely by lenders, so it's important to ask about all potential fees before signing. Finally, because borrowing reduces the equity you've built in your home, it can limit future financing options or reduce the cash you'd walk away with if you sell your house in the short term, especially if home values drop or you borrow close to your maximum available equity. Question 4. In what situations does a HELOC make the most sense, and when should you think twice? So a HELOC can be an excellent tool when you have a clear purpose and repayment strategy. For example, financing home renovations that increase your property's value makes a lot of sense because you're investing back into the asset that secures the loan. Using a HELOC to pay off high interest debt like credit cards can also be effective as long as you have a solid plan for paying it down, since the rates are typically much lower than credit cards. It can also be useful as a backup financial resource. Some homeowners open a HELOC before they need it, so they have access to funds in case of emergencies. Just be careful not to treat it like a savings account or emergency fund unless you absolutely have the income to support future payments. Where a HELOC might not be the best choice is when you're unsure about how or why you'll use the money, or if your financial situation is unstable. Because rates are variable and payments can rise. Relying on a HELOC without a firm repayment plan can turn into a financial stress point rather than a solution. So overall, a home equity line of credit can be a powerful financial tool, offering flexibility, lower interest rates, and the ability to pay interest only on what you use. But it also comes with serious risks since your home is on the line and payments can change over time. So whether you're thinking about renovations, debt consolidation, or simply having a financial safety net, a HELOC should be approached with a clear plan and a thorough understanding of both the pros and cons. Always compare multiple lenders, ask about all fees and terms, and consider how variable rates might impact your budget down the road. A well-informed decision can make the difference between a smart financing move and a costly mistake. For the full breakdown of HELOC pros and cons, including real examples, comparisons, and expert tips, check out the complete article from the Mortgage Reports, linked in the description below. And if you found this video useful, give it a thumbs up, subscribe for more practical home finance content, and leave your questions in the comments. We'd love to cover them in future videos. Thanks for watching, and we'll see you in the next one.